So hello everyone. In the last class we have discussed about the capital cost of power plant. We studied the various types of costs that are associated with the power plant. And we also look at the interest and depreciation. In today's lecture we will be discussing about the cost analysis of a power plant. What is the annual fixed cost of plant and what is the annual operating cost of plant? The annual fixed cost is a cost that has to be paid whether the electricity is generated or not. And the annual operating cost is the cost that occur due to the production of electricity. So let us discuss these two terms in detail. Now the annual fixed cost of a plant. Now the annual fixed cost is independent of the number of units generated and it is called the fixed cost of a plant. There are the various components that are associated in the annual fixed cost of the plant. They are interest, taxes, insurance, depreciation, managerial and general maintenance cost, and rate of return. Let us discuss these all terms one by one. Now, the first term is the interest. Now, we know that for the construction of a power plant, a huge amount of money is required, and this amount must be taken as a loan from the government or with the help of financial institution or acquired by the sale of stock and bonds or both. So, an annual interest on amount of capital investment borrowed from bank or other financial institution. So, while we calculate the production of cost of production of electrical energy, the interest payable on the capital investment must be included. Now, the second term is taxes. Now, the utility may have to pay taxes to the government. There are various types of taxes which may have to pay to the town, state, and federal authorities. And these taxes are the function of capital investment. So they must be included in the fixed cost. The third term is the insurance. The third cost, third part of the annual fixed cost is insurance. We know that to save any organization from the accidental damage such as fire, flood, explosion, earthquake, the insurance has to be made. So a very well managed utility have to incur expenditure on insurance against accident to the equipment and as well as personal. Now the next term is depreciation cost. The decrease in the value of the power plant equipment and the building due to the constant use is known as depreciation. And therefore it is necessary to take the depreciation cost tax into the account the depreciation of the component over a period of time. We know that the heavy equipment deteriorate or depreciate due to the wear and tear, corrosion, weathering. And at the time of replacement by a modern one, we have to accumulate some amount of fund to purchase the new. So this depreciation cost is nothing but the amount of money which accumulated over the period of time. So this depreciation cost is the part of annual fixed cost of plant. Now the next term is the rate of return. Now rate of return is nothing but the profit on the investment over a period of time. Right? So it is a private limited company and if it has floated shares or bond, it must pay a good dividend so that the value of the shares may be high and the undertaking may be successful. The time of return is typically a year, and in which the case the rate of return is referred to as annual return. The next is the salaries of management and other officials. A part of total wage bill of the power plant is constant, irrespective of the amount of energy generated. Right? So, a certain amount of supervision and maintenance is needed, even when it is not producing any energy. And this amount is nothing but the salaries of management and other official. And the last term is maintenance cost. A certain amount of supervision and maintenance needed even when it's not producing any energy. Right? So it is not necessary that the power plant produce energy at every instant of time. It may be in the shutdown state or maybe in not needed energy, but still maintenance has to be done. So this comes into the annual fixed cost of plant. So the annual fixed cost of a power plant for a ith unit is given by FCRI multiplied by UCI, which is multiplied by CI, where FCRI is nothing but the fixed charge rate of ith unit. The value of fixed charge rate is fixed on the basis of above mentioned component of fixed charge rate. So what we have mentioned yet so far is the interest, taxes, insurance, depreciation, managerial and general maintenance cost, and the rate of return. All this affect the value of FCR. Now the UC is nothing but the unit capital cost of ith unit in rupees per megawatt, and the CI is the capacity of ith unit in megawatt. So all this gives us the annual fixed cost of ith unit, that is AFC. Now the next term is the annual operating cost of plant. Now the annual operating cost depends upon the number of units generated. It also contains the various types of component like fuel, operating labor, maintenance cost, and supplies. Right? In the steam, diesel, and gas plant, the operating costs form a major portion of total annual cost. Right? Whereas in hydro, nuclear, and solar plant, the fixed cost overshadow the small operating cost. The cost of fuel that is being used is depends upon the following component. The very first one, the unit price of the fuel, amount of energy produced, and third one, efficiency of plant. So the fuel is needed. A large amount of fuel is needed for the steam power plant, that is in the form of coal, in diesel power plant in the form of diesel, and in gas power plant. Whereas in case of hydro and solar power plant, the fuel is of zero cost. And in nuclear power plant, a small fuel can produce a large amount of energy. So the second term is labor cost. Now we know that for the operation of power plant, a labor cost is another item of operating cost. The maximum amount of labor or maximum labor is needed in thermal power plant using coal as a fuel. A hydraulic power plant or a diesel power plant of equal capacity requires a lesser number of person. In case if we are using automatic power station, the cost of labor is reduced. But remember, the cost of labor cannot be eliminated completely, even in the automatic station, as the labor are required for periodic inspection, for maintenance, and for some of the operation. And the next term is the cost of maintenance and repair. Now to avoid the plant breakdown, maintenance is necessary. Now the maintenance includes periodic cleaning, greasing, adjustment, and overhauling of the equipment. The material which is used for the maintenance also comes into the annual operating cost of plant. For an example, if we are greasing the motor or generator, then the grease is required, and the cost of grease comes into the annual operating cost of the plant. So some percentage is assumed as a maintenance cost. Right? Now the repairs are necessary when the plant breakdowns or stop due to the fault developing in the mechanism. For an example, if the fire tube or of the boiler get damaged, then there will be no steam and the repair is necessary, because without the steam it is not possible to generate a single unit of electricity. So this repair cost is higher in case of thermal power plant due to its complex mechanism and the equipment. Now, the next term is the supplies. Cost related to the consumer materials such as lubricating oil and water for makeup, cooling purpose, and the general use. And the last term is the taxes. The various taxes that has to be paid to the state government and the central government, such as income tax, sales tax, social security, and employee security. So the annual operating cost of the power plant is given by AOC, which is nothing but the annual operating cost, which is equal to FCI sum of O&M I, where FCI is nothing but the annual fuel cost of the ith unit, and the O&M I is the annual cost of operating labor, maintenance, repair cost, taxes, and supply cost of ith unit in rupees per year. So now we talk about the annual plant cost. So the annual plant cost of the ith unit is nothing but the sum of annual fixed cost and the annual operating cost. Now this is what the expected annual energy generated by ith unit, which is given by EI, is equal to average annual load in kilowatt multiplied by 8760 hours, which is equal to nothing but the capacity factor multiplied by the plant capacity in kilowatt into 8760 hours. So the generating cost of ith unit in rupees per kilowatt hour is equal to nothing but APCI, which is annual plant cost, divided by EI, which is expected annual energy generation. And the generating cost of ith unit is equal to APCI divided by AI. Now, so far we have studied the two type of cost: annual fixed cost and annual operating cost. So basically, we can say that is a fixed cost and the variable cost. So the fixed cost is nothing but the annual fixed cost of a plant includes the interest, taxes, insurance, maintenance, depreciation, managerial salary, and rate of return. Whereas the variable cost of a plant means the expense which vary with the operation of the amount of energy produced. Now the fixed cost consists of the cost of land, installation, equipment, design, powerhouse, building, testing, commissioning. Whereas the variable cost include the cost of coal, oil, repair, water, salaries of operating staff. Now the fixed cost of hydropower plant consists of the cost of survey, bridges, dam, earthwork, railhead, highways, other civil engineering works, powerhouse structure, design, specification, equipment, testing, and commissioning, and extra. But whereas the variable cost of hydropower plant includes salary and wages of operating staff, maintenance staff, and supplies. The operating cost of hydropower plant is very small. The fixed cost of nuclear power plant include the cost of plant site, equipment testing, and commissioning. Whereas the variable cost of nuclear power plant includes the cost of fuel, water, material required for repair and maintenance, salaries of operating and maintenance staff. The operating cost of a nuclear power plant is very high compared with the hydropower plant. Thanks for watching. Thank you.